Hello traders, hope you're doing well. Now it's been more than 6 months since I made an education content in our channel. Really miss teaching you guys. Now I have decided to give some time and make some education content for you. Definitely if you are an intraday trader, it will be useful. The series is called Intraday Trading Series, where I'll be covering a lot of important concepts which you can use on a day-to-day basis when you're trading. Let it be you're trading in stocks, you're trading in futures market, or you're option buyer, option seller. If you're doing intraday, basically the concept what I will be teaching for you will be definitely useful. So what and all will I be covering in this intraday trading series? How to prepare the chart before market opens. Many people do that mistake. After the market open only they will start looking at where to enter, where to exit, all those things. But before you take the trade, before the market opens itself, you need to have a plan. You need to know certain levels where you can expect some kind of action in the market. At what levels we can see action? Basically near support and resistance level. So the first thing what I'll be doing is I'll teach you how to mark important support and resistance level on the chart, and these levels 90% of the time will be those areas where you can expect an action in the market. Action can be anything, big breakout, big breakdown, or that might be profit booking areas. So how to mark these levels before the market opens, that I'll be teaching you in the first section. In the second section, I'll be teaching you how to take trades using the levels. Marking support and resistance level after teaching, if you don't know how to take trade, what is the use, right? So the second topic will be how to take trades, that I'll be explaining. Third one, especially for option buyers, if you're trading, you get confused about which strike price to choose. So how to choose the strike price, which strike price if you take, you can expect good movement in the market, right? Or you can achieve your target a bit quicker. So that strike price selection process I'll be teaching you. Apart from this, risk reward calculation, very important. So basically everybody knows if I take a trade, minimum 1:2 risk reward we have to have. But at what level should you enter? At what level you can plan for 1:2 or sometimes 1:3 or 4? That I'll be explaining when I cover risk reward calculation process. Finally, how to avoid false entry. Many people take entry, after you take entry market hits your stop loss, right? Because there are certain small things which you fail to look at. So that small mistakes which you do, how to avoid, how to wait for confirmation. At what level can we say confidently the probability of this setup is 70%, 80%, and there is probability only we take trade, right? So there might be some false alarm in the market, based on that you cannot enter. All right, so how to avoid false entry, that also I'll be explaining in the series. And finally, I'll close the video with this conclusion. So in this series, I will try my best to explain complicated topic as simple as possible so that even a beginner can understand. All I want in return from you is when you're following this process, you have to follow this process only. You cannot use any kind of indicators. You cannot mix 2 or 3 strategies. I'll be teaching you the concept based on price action. In that, if you add any kind of indicator, let's say RSI, EMA, these things will create confusion. When confusion creates, you might not even take entry, or you might take even wrong entry. So to avoid all those things, in this series, my only expectation is you focus on the concept only which I have taught you, and you need to follow this process for 3 months. I'm 100% confident that if you just follow the things what I teach you in this series, whatever issues you have related to trading, that will get solved. Some concept what I explain in the strategy might seem very simple, but many people are doing simple mistake itself. I know some beginners also will be watching this series, so my goal is basic to advanced I'll start covering in this process, so stick to it. All these 5 topics or 6 topic what I'll be covering will come in as individual videos. Finally, I'll club it all and make it as an education content. So if you do not want to miss the second part or the third part of this series, then please ensure you have subscribed to the channel and don't forget to press the bell icon. Okay. The first topic which we'll be covering is how to prepare chart before the market opens. This is one of the most important thing. If you do mistake here, your entire day can get spoiled. So let's discuss about how to mark important levels on the chart. Now traders, before discussing about support and resistance, I would like to discuss about an important topic, which is market behavior. This is very basic concept. Many of you who's experienced, you already know this. There are some beginners also watching this content, right? For them, first let me discuss about market behavior. What is market behavior? Very simple. Whichever chart you open and see, market will move only in 3 ways. First is it will make higher lows and higher highs and move towards the upside. We call this as uptrend or bullish market. Second, market will make lower highs, lower lows and move towards the downside. We call it bearish market or we call it a downtrend. There are certain situations where market will just keep on staying within a range without making any big movement. So there is confusion in the market. So we call this as a sideways market. You can open any chart, Nifty, Bank Nifty, stocks, crypto, BTC, any stock you open and see, market will be making any one of these three behavior. So this is basically called market behavior. Now in the same example, just look at this uptrend. Before moving up, can you see market two times? One area it is respecting. This is the first time, this is the second time. So if market is holding on to a price level more than once and it is showing some buying pressure, we call this as a supporting zone. Same way, you can see here on top, this is the first time market moved towards the downside and this is the second time market moved towards the downside. So two times, minimum two times market is respecting a certain level means we call it as resistance. Now look at this downside chart, downtrend chart. Here also market, what has happened? It has respected the level one time, second time. After that only it is moved towards the downside. So we will call this as resistance. Resistance means market is resisting to break that level. That is what we call it as resistance. Support means from where market will move up. It's taking a support and it is continuing the trend. Here you can see first time market took support, second time market took support. So we will consider this as a solid supporting zone. Now many times what will happen is the market might either break off the support or resistance level. If you look at this uptrend example, in this case you see after two times respecting the resistance, market gave a breakout, right? After giving breakout, what has happened next? See here, market has taken support near the resistance zone, this one, right? This zone, market has taken support and it has continued the upside move. Many times you can see once the resistance level breaks, that resistance level in the future will act as a supporting zone for the market. Traders, the concept is very simple. If market is respecting a certain level multiple times, it's not able to go below that, that zone becomes the support zone. You can see this orange lines what I have drawn. Market is respecting that level twice and it's moved up without breaking that level. So that is a strong support zone. You can see two times market has respected a zone. It's not able to break that. That zone we call it as resistance zone. Sometimes because of buyer's pressure, what will happen? Market will break the resistance. You can see in this case, market broke the resistance level. The resistance will in the future can act as a supporting zone. In this case, you see two times market tested the previous resistance, acted as support and market moved towards the upside. Even sellers can enter the market. If they are very strong, they will break the support. So if they break the support like this, you can see in the future the support zone will turn as the resistance zone in the market. Then we have to start looking at the previous supporting zone as the next area where market can reach. Traders, I hope by this example you have got a basic idea about market behavior. You can open any chart and see this is how market behaves. Either it will be in an uptrend, downtrend, or it will be sideways. Sideways means indecision between the buyers and sellers. There will be a certain level where market will not go below that. That we call it as support zone. If an area market is not able to break, that becomes the resistance zone. Because of buyer's pressure, if market breaks the resistance in the future, there is a chance that that resistance can act as support zone. Because of seller's pressure, if market goes below the support zone, then the previous support zone will act as resistance. So this is a quick overview about market behavior. Traders, now I think you have got a basic idea about market behavior. How once support level breaks, it can act as resistance, and once resistance level breaks, how it can act as support level in the market. But everything I showed it to you in drawings. Now in real market, how support and resistance level works, that we will understand. Based on this, how do we prepare our chart for the next day's trade, that we will be discussing. Okay, so let's start. I'm recording this video on 24th of July. Let's say I want to trade on 24th of July. One day before, that is on 23rd of July, I have to start marking important support and resistance level so that those levels I can expect some kind of action in the market. Now, how do we do that? Very simple. I'll teach you. If you follow this, definitely most of the time you will be able to identify, okay, from this zone should I enter the trade or should I not enter the trade? All of this understanding you will get. Okay. Now imagine 24th of July I have to trade, means when I have to prepare the chart. On 23rd, after the market closing, that data I have to use. Next day morning 24th also, before the market opens, we have to already be ready by marking all the important levels. Now this is Nifty chart, and now my personal suggestion for everyone will be, whichever broker you're using, you use, okay, to place your order. But for chart reading, you have to use TradingView. I've seen many brokers having glitches, so to avoid that, better use TradingView. It is more reliable. Now imagine 24th data we do not have. 23rd we have to prepare the chart. Now the first thing what I will do on using 23rd data, you can see the calendar at the bottom. This is 23rd data. What I'll be doing is first mark previous day's low and high. So for 23rd, what is the low? This is the low because market opened here. It moved towards the downside. After that, it did not break this level. So this is the low for the day. And then I have to mark previous day high. What is high for 23rd? This is the high. This is the highest point of the day. This is the lowest point of the day. Clarity you have got. Okay. What do we do? 24th, if we want to trade, one day before 23rd data, in that we have to mark important support and resistance level. The first thing what we are going to do is mark previous day low and previous day high. And then what we will be doing? We'll be identifying important areas of action where support became resistance or resistance became support. How do we identify that? Take your mouse cursor from the lowest point of the day or from the highest point of the day. You have to keep moving your mouse towards the downside or upside. Let me show you from previous day low. Simply what I will do, I'll keep taking the mouse cursor towards the upside. Now here there is one interesting observation. I'll mark this level first. Now why did I mark this level on the chart? First thing, market opened here. There was a correction. After this, market moved up. Once this level breaks, what happened in the market? This level acted as a supporting zone from where market reversed. So this is an important level where resistance in the future has become a supporting zone for the market. So one day prior, this data we have to mark. Usually it will not be a line, it will be a range. For example, what you can do, you can take this cursor here and you have to mark the zone from here to here. Okay, you see this is the, I'll zoom it and show it to you. This was the range, and here also market very close to this range, it acted as a resistance. So this upper range, lower range, both you will join and then mark the levels here. Okay, this has become the range. Now what you will do, you will extend this and keep. Next, what has happened? This zone we have got, and then we'll start moving slowly towards the upside. And here one observation you can do. See here, market rejected from here, and after that it broke the zone. Here you can see after breaking the zone, here market is respecting the zone and it is moving towards the upside. So again what happened? This resistance level became support level for the market. Is there any significance for the market in the zone? Definitely it is. Sometimes if you see, if market is rejecting from a level, then in the past here do you see previously this area market was respecting from this zone. This zone, what happened? Previously it was resistance, again it was resistance, and then once resistance broke, this zone became the supporting zone, and from this zone market started moving towards the upside. So basically what we have done here, we have marked the low of the day and marked the high of the day. After that, we are slowly taking the cursor towards the upside and seeing at what level resistance market broke, and that zone is acting as support. Here is the first range where resistance level broke, and then this zone acted as support. And again here previously market corrected from here. And if you see in the past also, not necessary you have to always go look at the past, but in this case I'm showing this resistance level has more value because at this zone also market has corrected. So this zone we marked, and here also resistance started to act as support. From here market moved towards the upside. Basically, previous day low, previous day high, and in between where support turned as a resistance, that range we will be marking on the chart. So this is called chart preparation, and the main reason we are doing this is because as per market behavior, once the support level breaks, it can act as a resistance, and once resistance level breaks, it can act as support. We can expect some kind of big action in the market when these levels are broken. Okay, I hope you have got this clarity. Now all the markings from our end has been done and we are ready for 24th trading. Okay, so first thing what has happened today, market has opened with a red candle here, and we know the previous day high is our important resistance, and our goal is to focus on bullish trade. Market has to at least give a green candle closing above the previous day high. I'm just teaching you how to trade based on the support and resistance level which we have marked. Now in this case, did market break the previous day high? It did not, right? It broke the level, but it was a red candle and it was not a green candle. Closing it did not give, right? Closing of this candle is at the bottom. We cannot consider this as a bullish trade entry. Only if we get a closing, then we will be looking for opportunity. Next, what has happened? Market at the zone 23rd level. Once market broke, what should it act as? It acted as supporting zone here, right? So market 1, 2, 3, 4. Fourth candle we got a breakdown. Once important support level breaks, what does it become? It becomes the resistance zone. So based on this logic, what do we have? We have an opportunity to take a bearish trade because market has given a breakdown. So what you will do? Previous candle high, you will place the stop loss. You will take the entry when the next candle opens. Okay, next candle opens, you'll place your stop loss above the breakdown candle, and then you will try for 1:2 risk reward trade. Now here we will come across certain challenges where this support level, once it breaks, it will act as a resistance, but at the bottom we have one more previous day level, right? That might act as support, but in today's case it did not act. Based on this level only, if you take a trade, only 1:1.7 risk reward we get, but my always expectation is we have to at least trade for 1:2 risk reward. When we know previous day one important level is there, that level can act as support, we need to start being a bit careful. When market comes to the support, either you book your profit or trail your stop loss to cost. Basically you have to try for 1:2 risk reward trade, but in this case market gave a closing below this zone. But before that, can you see here, it tried to attempt to hold this level, but it could not hold because of bearish pressure, and based on that we got the next area. Market gave a movement of close to 90 points. Now here 90 points movement is what level? Previous day low level. Okay, more than that market has gone, but based on the setup, whoever's holding the trade based on continuation, they will hold, they will trail the stop loss. But when you're trailing, you need to manage your risk, you need to keep trailing the stop loss and going. So when market has come to this zone, of course you will not be placing your stop loss here, you would have trailed your stop loss, right? So one important thing now you need to understand is, by marking previous day levels, here we were able to identify a breakdown. Placing a small stop loss above that, we could look for a bearish trade in the market, which gave a very good movement. Today was a good day where market gave a very big movement, but most of the time 1:2, 1:3 is what you will be targeting. If you want to achieve more target, once market reaches 1:1.5, 1:2, if you trail the stop loss to cost and then hold on to the trade, additional movement whatever you get, it is a bonus for you. That's how previous day levels can give you an idea about taking trades. One more thing, what market will say, okay, previous day what was support, market has broken. As long as this level is holding, you should not be looking for any bullish trade, right? That is one kind of another confirmation you will get when you mark these levels on the chart. Now just imagine on Wednesday, if you had marked these levels on the chart, your trading would have become more useful. Now one more thing, some people might miss out on the opportunity here. Okay, market moved towards the downside. Again, where market is come, it's come to the resistance. Here you have an option to re-enter, placing the same stop loss here, and then look for 1:2 risk reward trade minimum. Now some of you looking at this, you will say, sir, the setup market is closed, already over. Now it is easy for anyone to say like that. If you say, there is nothing wrong in that. I have to justify, right? During the market as also this will work. So let me show it to you. Now traders, this is my free Telegram group. In this everyday morning, what do? I share my analysis. Okay. You see today I have shared my pre-market analysis video where I have marked all the important support and resistance level, and I have explained at what levels we can see action in the market. Now if you are interested, now after learning this concept, at the beginning if you're facing difficulty, simply what you do, you join my free Telegram group. The link is there in the description box below. Use that link, join the group. Every day I'll be giving pre-market analysis for Nifty, Bank Nifty, all these things. So it might be useful for you every single day to get used to marking these levels on the chart. Now okay, I gave the pre-market analysis, and later you can see additional support, resistance, all of these details also I have discussed. Now here you see the setup. This was the setup which I had taken today based on the same logic. Okay, so here market was continuously moving towards the downside, and at this zone what we had marked, we had got a breakdown. Based on that breakdown itself, I took my trade, placing my stop loss little above the candle, and I tried for 1:2 risk reward trade. Yes, it is a tempting trade. I took the trade, but based on what logic did I take this trade? Based on the same logic I explained to you today. Later point of day, you can see market came again, it came for a retest. I told you, right? Market, it came for a retest, look for entry. So this was the retest zone in my private Telegram group. Now here also you can see the update which I shared. First setup, I took it here. I knew market will be coming to the supporting zone, but here again when it came for a retest, I have left the trade as it is. Anyone who's interested for the same bearish setup, you can plan, but a risk, you please remember, take it under control. At what time did I say this zone only, right? Because here I got the entry, I took the entry. Okay, I placed my stop loss somewhere here. I looked for 1:2 risk reward, and later one more opportunity, better opportunity we identified, because once the support level is broken, it acts as resistance. Stop loss above, target 1:2. Whenever I trade also, I use this logics only because it works. Whatever works, I'm trying to teach you guys. How you make use of this is entirely up to you. Traders, I hope you're getting a basic understanding as to how to mark important support and resistance level one day before. How previous day low, previous day high acts as an important range. Now let me take one more instrument and give you example. Many people will ask, will it work in BTC, Ethereum? It works in everything. Only thing that you need to understand is not every time you will get profit. There is no strategy which gives you success 100% of the time. When it gives you, this particular strategy will give you good results. And also most important thing, people who are confused, should I enter, should I not enter? When you mark these levels, it will be a better thing for you. You see here BTC, today date is 24th. On 23rd, what did market do here? This is the low of 23rd. I mark this zone. And what is the high of 23rd? This is the highest point of 23rd. You can see down. You can see it here. 23rd. This was the highest point. This was the lowest point. Correct? And now, how do we prepare the chart? After marking this, slowly we will start moving the cursor towards the upside. We don't yet have 24th data. 23rd, how to prepare the chart for 24th trade, I'm explaining here. You slowly start moving towards the upside, and here what do you notice? I'll mark this zone. Why I mark this? Because on 23rd, two times market has faced resistance here. So what you will do, this zone you will consider. Okay, you have to include the wicks also. Okay, the highest point and the previous swing, and this is the highest point. We have marked this. After marking this, next, any other level do we have? Here you will notice one thing. The zone on 23rd, it was acting as support also. Previously also it was acting as support for 22nd, but we are looking at the data only based on 23rd. Previously it was acting as support. Once this level broke, this acted as resistance. So this level we have marked, and slowly you start moving towards the upside. Any other level? Here nothing. Here you can see one more level I have marked. Only using 23rd data I am marking, alright? Please note that. Why did I mark this zone? Let me show it to you. This is the 23rd data. Market moved up, and you can see this zone market moved up, and again this area acted as support. This zone continuously 3 times market respected. This zone became the support. Once the zone breaks, what does it become? It becomes resistance. So since this is 1 day before data, this zone also we will identify and we will mark it on the chart. What and all we did again? Previous day high we marked, previous day low we marked. We marked the area where support started becoming resistance, and the area where previously resistance can act as support. Those levels we have marked. Imagine you marked all of these levels 1 day before. 23rd of July, you mark this level. So on 24th, market opened. Now what do you understand? You understand that this is a previous day lowest point. Market is bearish only if it goes below the lowest point. You can see here market came to the support 24th and it moved towards the upside. So anyone with small stop loss, if you had placed, you would have got a good trading opportunity. So maybe this will be your profit booking zone, because you know previously this was the resistance. Next, this area can act as a resistance zone in the market. Now yesterday we had marked this zone and market is not able to break that zone. Maybe what you would do, you will consider this area as resistance. If you had got any breakdown here with small stop loss, for example, let's say you got a red candle breakdown, small stop loss above the previous candle, you would have looked for 1:2 risk reward trade. But based on this zone, did you get a breakdown? No. By chance, sometimes we might get tempted looking at, we might not wait for the candle closing, we might take entry. That time we might get into trap. Without thinking too much, we have to give the stop loss and close. Let's say you gave a stop loss here. Later point of day, what you understood? Here market behavior changed. The resistance what was there for the same day, it gave a breakout. So once resistance break, what does it become? It becomes support. So what you will do, breakout candle, next candle, you will look for entry, you will place a small stop loss, you will target for 1:2 risk reward. Okay, so what is 1:2 risk reward? You see here, this is the breakout candle. Next candle, maybe you would have entered, you entered next candle. Let's say you know previously this was the resistance, you will place the target there, you will place the stop loss below that candle. So 1:2 risk reward here up to the zone market has gone. By chance, let's say you gave a very small stop loss, here stop loss would have been hit. It depends on how much stop loss you are ready to give. Since you know BTC is volatile, minimum 200 points close to you can give as the stop loss, right? And one more thing I'll tell you here, only I'll clarify certain doubts. Let's say the candle is very big. Can you enter? You should not be entering, because if you enter here, your stop loss will become too big. Then what you will do, you will wait for a retest. For example, here BTC gave a breakout. After breakout, imagine here only it has given a breakout, so you might take entry here. But let's say the breakout candle is up to this zone. That time what you have to do, you have to wait for the retest zone, because once resistance level breaks, what will it become? Once resistance level breaks, what will it become? It will become the support zone. So you will wait for the support, then you will be taking re-entry in the market. Okay, that's how the logic works. Whenever there is a big candle, you should not be looking for entry. Now later point, what happened? Market here came near the resistance zone, right? This is the resistance zone. Now from here, let's say by chance you looked at this breakout, next candle you entered the trade, placing a small stop loss. Maybe you would have given the stop loss, but very soon you will realize that I have to not give a bigger stop loss because of the market continuation, right? In case you have entered here, you would book loss. I mean, if you have taken a bullish trade, but if you understand, okay, this is a breakout failure, then what you will be doing, you will be taking a bearish trade at the reversal. Let's say you took a long trade here, you missed out. As long as this level breaks, this upper level breaks, you should not be taking a bullish trade, because here market has created a trap. So based on that, you can be looking at it. Imagine you missed taking a bearish trade here. Then what will happen? You will see what is the next zone. This is the supporting zone. Did market give a breakdown below this level? Yes, it has given a breakdown. If this is the breakdown candle, can you enter the trade here? No, right? You have to wait for a retest. But in this case, good thing is market came for a retest here again to the area which we wanted, right? Here, once support level breaks, what does it become? It becomes resistance. So you will take a bearish trade here, you will place stop loss above this candle, you will target for 1:2, or you keep trailing and stop loss and go, you will be able to capture the moment. Every time will it work? No. But when it works, have you seen the results? That is the reason how previous day levels will help you out every single day. You know some kind of action you can expect at the zone. Next, let's say you book the profit here, market is not able to break the support, you looked for a buy trade. Okay, in case you know this is the zone. And now what is the most important thing? Most important thing is previous day levels you marked, but today you got to know market gave a trap here. After trapping, it moved towards the downside. Simply what you will do with the existing data, you will consider the previous area as resistance. Okay, so in the future you will be taking a bullish trade only when market sustains above the zone by giving a closing with a green candle. So you will not be taking any entry here. Yesterday's data we are taking, based on that we are planning a trade. Once new data forms in the market, we have to give importance to that, right? That level, if market is respecting once or twice, that level we have to give importance. So here we have given importance. So as long as this level breaks, bullish trade we should not be taking in the market. Okay, now you might say here also, sir, market nicely came here, it moved towards the upside. Not necessary. You see, in my crypto community group, every day I share importance of support and resistance level. At what level did BTC move? The zone already had given, it came up to this zone. Second time it gave an entry opportunity, right? So this is the zone. And Ethereum, these were the levels I shared. And for Solana, these were the levels. And for gold, these were the levels. Oh, you see BTC, this was the level. Ethereum, this was the level. Market came to the support. You can see this zone. Market gave a breakdown here, little bit of trapping, and it started to reverse. Here, definitely it gave a breakdown, means I would have taken a small stop loss here if I had traded here. But later point of day, we know once this level market is holding, we know this is the base. As long as this level breaks, we should not be taking any bearish trade. So like this, certain situation you will come across where you might miss out on opportunity, but over the period of time, when you keep continuously following this, my suggestion will be 30 days. You follow. Based on that, you will get an idea as to how to mark important support and resistance level on the chart. Once you become that, you will become independent. Once you become independent, then slowly you will be starting to take trades on your own. You will be able to identify certain levels where you should not be entering, where you should be entering. You will only get clarity on your own. So basically, how do we prepare our chart? First, we will mark previous day high and low. Let me give you one more example. This is the 14th of July. Let's say I mark the low of 14th of July. You can see the date here, 14th of July. And what was the high of 14th of July? This, right? This was the high. After this, what we will do, slowly we will start taking our cursor towards the upside. And here I'll mark a zone. Why I mark this range? You know, right? Two times this area was acting as resistance. Once this level breaks, it started to act as supporting zone for the next day. So next, this upper resistance we have. Now once I mark this levels on 14th of July, one day before the market opens, 15th of July, to a certain extent I am prepared. So 15th of July, what happened? Market opened with a bullish candle which broke the previous day, this reversal zone. Okay, now we know immediately this is the high. Market is not able to break that zone. I should not be taking any bullish trade. And since you can see this resistance, once it broke, where did market take support? Previous day resistance now acted as support for the market. That's why you know once this zone breaks only, you should be taking bearish trade. Okay, here you got a clarity. And later, once the high of the day, let's say market gave a closing here, then what you will do after the closing, when the next candle opens, this is the opening candle. Once you see, you will place the stop loss here, or if you want, you can give little more stop loss, and you will try for 1:2 risk reward trade. Now why did we enter at the next candle even though there is a wick? Because you please see here, this was the previous resistance, market has given a closing above that. Okay, that is the logic for looking for opportunity. Then what you will be doing, the same 14th of this one data you take here, we have marked the high, so 2 times the zone market respected. Okay, this is the high, this is this one, and you extend this. Now next what you will see is market behavior. What is the market behavior? Once resistance level breaks, it becomes the supporting zone. So as long as this zone breaks, you should not be looking at any fresh opportunity. All right, so this is the concept. I hope you have got a basic understanding or clarity about how to mark important support and resistance level on the chart one day before market opens. And also you have understood the concept of market behavior. Once resistance breaks, it will become support. Once support level breaks, it will become the resistance. We need to mark the chart one day before or at least 30 minutes before the market open. And I would suggest you to look at only TradingView, not your personal broker's chart. Opening account with TradingView is absolutely free of cost. Go to Google, open an account, only email address is required. You open. I don't have any referral link. I don't want to share also. You just have a look into that. If you want, you see the next day also, 15th of July. This is the market movement. I have marked the low. Let's say I mark the high of the day. And we know the area where market rejected. Here the first candle is a red candle. If it is a red candle, will we enter the trade? We will not enter, right? So market continuously it came, and those who think about taking a bearish trade, maybe they would have taken here because the resistance level is not broken. Market is come for a retest. I told, right, if the candle is big, if you cannot take entry, what you have to do when it comes for retest at the same resistance zone, you should not be waiting along too much. You have to take the entry. Let's say you took the entry, place the stop loss near the, you got a fresh resistance zone, you place the stop loss here, you tried for 1:2 risk reward. That is how you capture. And later point of day, once market comes to this 15th zone became the support zone, right? So what we would have done, 14th data, we would have taken the low and the zone we would have marked, considering this area as support. So profit booking will be there for you here. And next, if you want to take a bullish trade at the zone, actually it is confusing, people might not take. What you got to know, for 15th of June, this resistance we took entry, but now the main resistance has become here. So once here market gives a closing, let's say here market gave a closing. Okay, it gave a close. This candle market gave closing. Since this candle is big, you will wait for a retest. When once it comes here, you will place the stop loss. Try for 1:2 risk reward. In case you are worried, your target got achieved, but sometimes people might not be able to exactly time the market here, right? But avoid bullish trade when it is a big candle. You have to wait for retest. You don't have to wait too long. Okay, when it comes for retest only, you have to enter. What is the logic? Because let's say long position you take here, the next candle, you place the stop loss below this candle, then already you're giving 50 points risk. For that, for if you want to capture, you have to try for minimum 1:2 risk reward. Okay, so that time, in this case, you see target did not get achieved. Maybe in future target might get achieved, but most of the time waiting for retest is important. Okay, here in the retest, when you do, your risk also becomes small, your reward also will become easily achievable. And next you can see next day also, let's say 17th of July, you have marked the previous day high. As long as this level breaks, you should not be looking for bullish trade. Market opened with a very big gap down. Here you can see this zone was acting as resistance area. Okay, market held on to this range. Once this level breaks only, you have to look for bearish trade. This candle, definitely it's difficult to enter. If you're not able to enter, again retest zone, exactly when market comes to this retest zone, entry here, stop loss here, you will look for 1:2 risk reward trade. Okay, so for some of you, when you look at this, you might think, okay, it's very easy and things like that. But in the live market, taking decision will be a bit difficult. That is why I'm suggesting practice it for 30 days. Now, those of you who's really interested to learn this concept, I would suggest you to join our free Telegram group where every day I keep discussing about important support and resistance level. Early morning itself, I'll make a 2 minute, 3 minute video explaining important areas for Nifty and Bank Nifty. The link for the free Telegram group will be there in the description box below. You can check it out. And those of you who wants to become a part of our crypto community group where I share important support and resistance level, where you can expect big action in the market, you can open account with Delta Exchange. The link is there in the pinned comment. Once you open an account, please send a WhatsApp message to the number that is displaying on the screen so that we will check and we will give you access. Okay, so traders, I hope this video was useful. What and all we covered today. First is market behavior, how support can act as a resistance, how resistance can get changed to support. Second, we learned how to prepare the chart one day before and mark important support and resistance level and how to identify the areas of action. This we understood. Next, how to enter the trade. 1:2 risk reward. Based on that, we have to enter the trade. That is the setup. Minimum 1:2 risk reward. And in case the breakout is very big, then what we should do, we have to wait for a retest. Sometimes we'll miss out on the opportunity. That is okay. We cannot enter the trade when there is a very big candle like this because risk reward will not set properly. So these kind of things I have explained, and this you can use in every market because this is purely based on price and price action. So majority of the market will behave like this itself. Actually, all the market will behave like this itself. There might be those days where you might be giving small stop losses here or there, but when you capture the moment will be bigger one. Now traders, we have come to the end of the first part of this video. Apart from this, there are certain things like how to choose the strike price, based on which strike price should I enter the trade. So how to place stop loss based on the strike price. All of these things are new concepts. If I get good support for this video, then I'll make one more video explaining this concept where I'll clarify all these doubts. Which strike price to choose, how to place stop loss in the premium chart when we are trading in Nifty and Bank Nifty, Sensex, how to mark those levels. And there are some common mistakes what people will do while taking trade in based on this strategy. So what are those common mistakes? How to avoid this common mistake? That also I'll be discussing. So if I get 5,000, 10,000 views for this video, and if you guys are supporting the channel, at least giving 1,000 likes for the video and commenting, and you tell me that you want part 2 of the video, definitely I'll do it for you guys. Thank you everyone for watching the video. I hope you learned something new today. I'm sure if you follow this for 30 days, you can see a drastic change in your intraday trading, and also you will become very good at marking support and resistance level, and you will avoid false entry in the market. There are certain concepts which I follow based on price action, stop loss hunting. I use Fibonacci levels, that and all, everything I cannot cover in this video. Based on the support that I get for this video, I will start making more videos in this channel. Alright, thank you everyone for participating. Support the channel by liking the video, subscribing. It will motivate me also to make more videos for you guys. Alright traders, take care, bye bye. I'll see you in the next one.